So let's talk about Nvidia. So Nvidia blasted through earnings. My video about it aged quite well. And now we're facing with this unbelievable price tag of about $1,000 a pop. So let's go over this and let's find out if this is a buy at $1,000. Now look, Q1 numbers, absolutely phenomenal. Revenue is up 262%, earnings up 700%. This is video game numbers. You know those video games when you create a character and you max out every single attribute it has to 99? This is what Nvidia has become. Data center revenue is up 430% year over year. It's now 87% of the total revenue of the company. Demand for Blackwell H200 chips are out of control, way more demand than supply. This is just the start of a massive cycle for Nvidia. I know a lot of people think about Cisco. Get this stuff out of your head. This ain't Cisco, not even close. And I'll explain in a second why. And in my previous video, I told you that $1,000 per share price for this stock represents an assumption of about 50% growth in revenues for the next 5 years consecutively. So basically, this price target assumes that Nvidia is going to do 50% revenue growth for the next 5 years every single year. Now, for any other company, that would be an absolutely Herculean task. It's like climbing the Everest naked. However, for Nvidia right now, with what they're doing, it doesn't seem unreasonable at all. In fact, we might look back at this in 5 years and this is going to look ridiculous. Like we sandbagged the assumption. Now, could there be a pullback on a stock like Nvidia? Sure. It's not immune to pullbacks and corrections. It's not made of solid gold. It's just another company. It's a terrific company. It's an excellent company, but a pullback, a correction definitely might happen. You might have profit taking, macro data, overexcitement in the market that needs to cool down, geopolitics. A lot of things can happen that can send the stock into correction territory because no stock just endlessly goes up without a correction. That never happened before. And it won't happen now because this ain't how the stock market works. Now, long term, that's a whole different enchilada. Now, for those of you who are actually interested in buying more Nvidia stock, whether you are an existing shareholder or you're a potential shareholder, don't rush into it. Don't just FOMO, mortgage your house, and just buy a bunch of Nvidia stock. You need to do this slowly over the next 2 to 3 years. And the way to do it right now is look at the current price. The 52-week high is $1,000 and change. So make a mental note. Every time the stock goes below 800, which is 20% below the 52-week high, then you can accelerate the rate of your dollar cost average. If every week you're buying 50 shares, now every week you buy 100 shares as long as the stock is $800 or below. Now, when the stock moves in the current price range of $1,000, $1,100, all the way up to $1,200, that's just normal dollar cost average territory. You buy every week the same amount and you just accumulate. If the stock flies way too hot into the sun and goes past $1,200 super quick, that's not a good sign. In fact, that is a contrarian element you need to pay attention to. But it doesn't mean you sell, it doesn't mean you stop buying. If the stock flies above $1,200 in the short to medium term, what you do is you slow down your DCA, your dollar cost average, and now instead of buying 100, you're buying 50. So the whole thing is very simple. In one range, you're doubling. In one range, you're buying normal. And if you go above $1,200, you slow down to half speed. That's all. You're creating a weighted average that's going to be very close to the bottom in the next 3 to 4 to 5 years without timing the market. Now, there's massive capex going on right now, and this capital expenditures by companies creating the infrastructure for AI is driving Nvidia's business. But the question here is Nvidia too expensive at $1,000? Maybe the price is absolutely out of this world, and we should stay away because, just a couple of years ago, it used to be a $100 stock, right? Well, I get this argument, but let me tell you one simple thing. If you look at the forward PE, the price to earnings of Nvidia, which in my opinion is the right way to look at this, forward PE, not current PE. Forward PE of Nvidia is 32.4. That's not exuberant. That's not out of this world. In fact, that is way cheaper than a lot of stocks that are being trading at 35, 40, 45, 50, 55, 60 PE. That's not insane. In fact, I would argue that at the current price rate with the 32 PE, this stock is fairly priced and maybe even quite cheap. I know I'm going to piss off a lot of people by saying that, but I don't care. And here's another point that's going to piss people off. If you buy Nvidia right now at $1,000, you're just basically paying for the data center business. That's like 90% of the revenue. They're all buying it right now because of the data centers. But guess what? Nvidia ain't done yet. They have a lot of stuff going on in gaming, in the automotive business, in visualization. I can't say it. I can't say visualization. I can't say it. I'm just gonna give up. Visualization. Oh, we got it. Software. There's a lot of heads in this monster right now. One big head is getting all the attention, but essentially you're getting all these extra stuff, including visualization, for free. You're just buying data center business, and that's not a bad deal. Now, I promised to explain to you why this isn't Cisco. If you remember back in the day, for those of you who are older enough, Cisco came up when the internet was coming up. Everybody needed to upgrade their infrastructure. A lot of capex happened. Cisco flew up, and then it basically came down to earth when everybody, was done with their infrastructure upgrades. And a lot of people fear that that might happen in Nvidia because it seems very similar. But here's the problem. We're not talking about internet telecom infrastructure. We're talking about computing. With computing, the pace of innovation, the pace that you have to keep up with is absolutely insane. The capex that they're doing right now are only going to be good enough for the next 3 or 4 years max. And then a whole new cycle will begin. Look at the H200s. The H200s that Nvidia put out for the ChatGPT 4.0, it's double the capacity. It's double the abilities of the H100. Now, that life cycle was 18 months. ChatGPT was announced in November of 2022. We're currently in mid-2024. So we're 18 months away from the announcement of AI, right? And in those 18 months, Nvidia has already replaced the H100s to the H200s. And guess what? In 2 to 3 years, it's going to be another cycle and another cycle, just like with computers. You buy a Mac, and in 2 or 3 years, you need a new one. It's just not good enough. It's not telecom. With computing, every 2 or 3 years, you have massive obsolescence of your infrastructure, of your network, of your chips. So Nvidia is just going to keep pumping out these guys every 2 or 3 years, and this endless money glitch is going to continue. And yes, the current gross margin of Nvidia of 80% for a company that does tangibles, hardware, that's a monopoly number. Eventually, they're not going to be a monopoly. There's going to be competition, maybe even China, who knows. So that number is going to drop. The 65% operating margin, that's going to drop, but it's not going to go to zero. They're still going to be making very good bang on their buck. Now, there's risks here for sure. It's not a risk-free. If you want a risk-free, get a treasury. Get 5% and sleep well. There's a lot of risks. Macro risk can go, rates can go, geopolitics, the market might go south. Who knows? Wars, competition. China might pull something out of the butt, completely competes with Nvidia, and then there's a whole price war. A lot can happen. So there's definitely risks here. But guess what? Right now, Nvidia is the numero uno, and they're leading by a huge gap, and they are running the fastest of everybody who's running in the race. So if you're already quite comfortably in the lead and you're running faster, ain't nobody catching you. Which means that as long as you understand the risks that do exist, and as long as you understand that any stock can go to zero, Nvidia might be the sort of stock that needs to be in every portfolio. Now, you tell me your thoughts in the comments. Let me know below if you agree, if you disagree. I may have pissed you off. That's fine. That's even more than fine. Let me know below. And of course, I invite you to join our community at discord.gg/TomNash. It is free to join. Join the Patreon if you want to become a part of our academy, where we teach you more skills, more related to long-term investing. We don't talk about trading and stuff like that. Patreon.com/TomNash. And of course, if you haven't yet, check out Stock MVP, Stock-MVP. It's a platform I've created for retail investors to research stocks at a fraction of the cost of what institutional tools charge you. And trust me, it's twice as good. I'll see you in the next one.